Hey guys, it's James back with another evaluation video. Today we are doing ticker symbol EMR, or Emerson Electric Co. When you think Emerson Electric Co., think automation solutions and commercial and residential solutions, and I was poking around on their website. So think refrigeration when your food is being transported between grocery stores from the agricultural farmland to grocery stores and in the distribution centers. Think refrigerated semi trucks. Emerson probably has something to do with the refrigeration units in those trucks. That's just one application. There was another application I was looking at here, a commercial application, taking a look at their food waste disposals. So think back kitchen of a lot of the restaurants that you go to, something like this where you have a commercial style kitchen, large sink with garbage disposal like products. So when you think Emerson Electric, think those type of things, and they do have a lot more product lines than what we just mentioned here. So definitely a long-standing good company with good free cash flows. Now the free cash flows have been pretty stagnant over the past 10 years. And their dividend growth rate is actually not 66 years, it is 26 years. They're currently sitting at a PE ratio of 17.88. It is a little low compared to the average of the S&P 500. Their dividend yield is 2.15%, and they pay out $2.08 per share annually. Again, with a 26-year dividend growth rate. So we're going to evaluate EMR to see if it is a buy or sell at the current prices and at current free cash flows. So first off, we find the free cash flows for the most previous 10 years, and we do that by going over to macro trends for Emerson Electric, coming down here and taking a look at their free cash flows from 2012 to 2021, and that gives us our 10 years of free cash flow with a perpetual growth rate of 1.5%, which is pretty standard for the discounted cash flow model, 8% discount rate. Total cash and total debt for EMR, you can find that over on Seeking Alpha, and I do have the Seeking Alpha premium subscription. It gives you just a little bit more insight on some of the stocks that you analyze, gives you greater insight on some of the analysts' ratings. And I'll leave a link in the description if you're interested in signing up for Seeking Alpha Premium. Seeking Alpha might give you a discount as well if you sign up with the link in the description. So go ahead and check it out. So back to the valuation for Emerson, the total cash and total debt. We're going to take these numbers, $1.8 billion for the cash, $10.87 billion for the total debt. Put that into the calculator. That gives us a discounted cash flow model of $108 with the current price of being $96. But let's go ahead and evaluate Emerson Electric with Graham's model and the dividend discount model. Analysts are projecting EMR to have about a 6% growth rate for the next 5 to 10 years per year. The AAA corporate bond rate, you can find that by just doing a quick Google search. 4.5%. That gives us a valuation of $68 using the Graham's model. The dividend discount model is going to be $2.08. Again, coming back over to Seeking Alpha. If you type in the ticker symbol EMR, go to dividends and the dividend score card. Coming down here on the dividend summary, we're going to use these two pieces of information here for the dividend discount model, the annual payout and the 5-year growth rate. So $2.08 and 1.41% with a dividend growth of 26 years running. $2.08, 1.41% 5-year dividend growth, risk-free rate at 3.5%, which is the 10-year bond yield. Risk-free rate, meaning if you were to take your money and put it risk-free in the bond market, you would get 3.5% yield. What is the average expected return of the market? Now, typically in the dividend discount model, you're going to do something between 8 and 12%. If you don't understand the dividend discount model, it can give you a negative valuation. So do some research. If you're starting to get a negative valuation here, do some research and try to understand what this model is the type of stocks this model is best suited for. And if you guys would like to follow along here in this series that I'm doing, evaluating these stocks, you can download this calculator as well as all the other calculators that I have over on my Patreon. We're doing this for a bunch of different stocks. We've already done it for 4 separate stocks, and we found that each and every one so far has been overpriced. So if you'd like to follow along, you can download the spreadsheet over on Patreon. So now we come to the final valuation, average valuation. If we go ahead and click go with a 20% margin of safety, final valuation of $53.71 compared to the current price of $96.87 with a sell rating according to these numbers right here. Now with the margin of safety, I like to think if you have a longer time of investing horizon, say 25-30 years, you could probably be on these lower figures here. But if you are a little bit more stingy with your money, maybe 5-10 years until you start to have to pull your money out, maybe 20% and above. But for most of these stocks that I'm doing, for myself personally, I'm safe with about a 15% margin of safety with a final valuation for EMR of $57.07. Coming over the watch list here, let's go ahead and put in $57.07 in our valuation on December 3rd, 2022. And over time, I will come back to this spreadsheet here. And as these prices right here change, if they do drop below our previous valuation, depending on, let's say they had a earnings per share come out, or they had a new free cash flow number presented, and that would change the price of the stock, then we would reevaluate if the valuation would say take a look. So what would that look like? So let's say the valuation for EMR ended up being $108. It would say take a look. It would turn green. So that is the spreadsheet in a nutshell. So we're going to go ahead and go down this list. We're going to take a look at 3M and Cincinnati Financial, as well as the rest of some of these very well-known stocks. A lot of these are the dividend aristocrats. So with that, hopefully you enjoyed the video, and thanks for watching.